Hello, everybody. Welcome. Give you a couple more minutes for everybody to get settled, but we're so glad you're here today. Welcome to Money Talks. That's what we're all about today. And I guess the subtitle could be How and Where to Raise Growth Capital for Your Startup or Small Business. My name's Rick Hood. I'm the Director of Capital Access at RAIN. And if you would, please take a moment to introduce yourselves on the chat. Please include your name, your organization's name, and the city that you are located in. That would be great. So while you're doing that, I will talk a little bit about today's opportunity. So raising growth capital, that's why we're here today. And we've assembled a knowledgeable panel of folks who help founders and owners grow their businesses, and they'll be introduced in a minute. But first, let me briefly introduce RAINcap. RAINcap, it's the first of its kind partnership between a top international crowdfunding platform, namely Republic.co, and a regional innovation network, namely RAIN, to provide greater visibility to both investors and lenders for organ entrepreneurs and small business owners. Simply put, RAINcap is an online marketplace where investors and private lenders search for opportunities to make community impact investing, as well as a financial return. So it's really both. I guess I would ask the rhetorical question of myself, is there a need for RAINcap? And the answer is yes. Here in Oregon, and really across America, we face a challenge called the capital gap. And this will sound familiar to most of us. Many small businesses and startups want to grow, but are not yet bankable, and angel and venture funds cannot find them and cannot see the vital role they play in their communities. In fact, 84% of Oregon startups and small businesses fall into this gap. And the pandemic only made this problem worse, forcing many businesses to close. So enter RAINcap. This is the brainchild of RAIN CEO, Carolyn Cummings. She saw the capital gap for years. She saw it getting worse and applied to the federal government for a grant to fund the creation of RAINcap. So we're fortunate to have found similar goals to inspire community impact investing at Republic. And they are our high value adding partner in this venture. We have some very important sponsors to thank, and we could go to that slide. The Federal Economic Development Administration is making RAINcap a reality, and we thank them for believing in folks like us and folks like you. And our sponsors help to make RAINcap a reality as well. Oregon Pacific Bank is a longtime supporter of RAIN, and we're fortunate to have Mike Webb, Vice President and Commercial Relationship Manager in Florence, with us today. Hey, Mike, welcome. Thank you for all that you do and your bank does. Would you take a couple minutes to introduce yourself and bring us up to speed on how Oregon Pacific Bank helps startups and small businesses fund their growth?
Thank you, Rick. I've been with Oregon Pacific Bank in the Florence office since 1998. I've been a commercial lender since that period of time. And Oregon Pacific Bank is really proud to be working with RAIN because RAIN helps fill a gap that some of the loans that we cannot do. Startups are difficult. So we look for ways to support or help the borrowers get their business plan lined up and find a way to solidify some kind of cash flow projections or historic cash flow, or even cosigners to put together a loan program for them. But bank financing is not always the easiest way to go. A lot of times at the beginning, we are more of a consultant than a lender, and we can help you get lined up and things in order, but we can't always lend money right away. But we try to get you there as quickly as we can. So that's each person, each business has their own life, and we go that way.
Oh, that's great to hear. And I know we'll get into this a little bit more, Mike, in the panel itself. But thank you for being here, and thank you for all that you guys do. Yeah, so here we have funders, my goodness. We wouldn't be able to offer our free entrepreneurial programs and support if it wasn't for the following 18 cities and 4 counties for inviting us in to serve their entrepreneurial communities. You can see them there. I hope you can read them, but we're very proud of this list. And we're proud that it's too long to read. And of course, a big shout out to US EDA for helping fund our RAINcap crowdfunding platform that you're going to hear more about today. Let's just quickly look at what does RAIN do? And that slide is there now. We activate, we access, we advocate, and we accelerate. And so we activate communities and entrepreneurship. We access talent and mentors and partners. We advocate policies and legislation and try to reduce barriers. And we accelerate education, growth, and capital. So we are very proud of what we're doing, and we're very pleased to have you here. In fact, I think, what do you say? Let's do a poll. Let's do a quick poll. And just so you know, all results are anonymous and aggregated. So we can't tell exactly what your answers would be. But here it is. And we're curious about what kind of fundraising you may have done in the past. And by fundraising, I'm talking about bank loans, but also it could be a loan from your brother-in-law. It could be balances that you put on a credit card in order to finance growth in your business. But it could also be equity investors, all that kind of thing. So please have a go at that. We're also interested in what sort of capital raising goals you might have for this year. And thank you. We're getting some good answers in here. Let me see for the first. Let me see. Here we go.
And also, just wanted to chime in to scroll down. There's 3 questions if you're not seeing them all on your screen.
Yeah, so we've got about 57% participation so far, and yeah, can we talk a little bit about these results here very quickly? It looks like there are about half of you have raised money in the past, 52%, and 48% have never raised money apparently. And in the actual what you've actually raised, the bulge in the python is under 50,000, and then we've got 52,000 to 250,000, about 12%. That's about the same with over $1 million. And then 8% of you raised between 250 and 500,000. So that's a pretty good number. Let me see. I'm not able to scroll down. Oh, there we go. Oh yeah. So I think how much that you're going to need to raise this year? Again, it looks like the bulge bracket is under 50,000 at 40%, and 50,000 to 250,000 is another 32%. 250,000 to 500,000 is 4%, and $1 million plus is 16%. And those of you who are not currently raising was 8%. So we've got some interested folks here today, I would guess. And that's really great. Thank you for doing that. Let me see here. So thank you for your participation in that. At this point, it's my pleasure to introduce RAIN's CEO, Carolyn Cummings. And I know there's probably a lot of folks here who know her well, but we're very pleased to have her here and so proud of all that she's built. And so take it away, Carolyn.
Thank you, Rick. And thank you everybody for showing up today to talk about money. I mean, that's why we're all here. We want to hear from our panelists, which I am one of. But I'm Carolyn Cummings. I'm the CEO of RAIN, and I've been with the organization for about 7 years now. My background is being an entrepreneur, mostly in the tech space. I've experienced a failure, I've experienced an exit, and I learned a lot from the failure, as we all know. It's not easy starting a company or growing a company, in particular in this climate. And so I appreciate you all showing up to share and learn. And our ultimate goal is we want to wrap whatever resources you need around you to help you get over the barriers for whatever you're facing. And of course, today the topic is about capital. So I'm thrilled to be able to talk with you all about that. We've assembled an incredible panelist with you from other community partners. We're going to talk about various different topics. You're going to hear about what that is momentarily. But I just wanted to take a minute and introduce you to someone really special who is going to be joining our team here. Look at my clock, March 7th, though I already kind of feel like he's been on our team for some time now. His name is Robert Killen, and many of you may know him as the director of the Lane Small Business Development Center. And we have him joining our team on March 7th, as I mentioned, as our first ever deputy director. And I have known Robert for many, many years, not only when he was or currently is in his role leading the Lane SBDC, but before that, when he had a leadership role at the Springfield Chamber. And before that, he was in the banking industry. So he knows startups, he knows small businesses. Having him join our team and really doing a lot to be able to wrap even more services around all of you is pretty incredible. Because I don't know if many of you know, but our board right before the pandemic had voted for us to become a global nonprofit. And I'm thrilled to be able to go out and expand this great program throughout not just the United States, but also globally. And there's a demand there. So with that, I'm going to hand it over to Robert Killen, who is going to introduce and moderate the panel for us. Robert.
Thank you, Caroline. I am so excited to be able to make this transition. This is actually somewhat ironically my final formal presentation as the SBDC director. I don't think I've got anything on my calendar for the next week and a half. So here I am working with you, collaborating with Rain as we've been doing since I stepped into this role. And it's been an absolute joy to be able to create that collaboration, build that collaboration, and like you, I feel like it's only right that this is my next step. That on the 7th, I will be able to, as you mentioned, I'll be able to change my background. So let's get this show on. Well, let me tell you a little bit about me. Caroline already mentioned many things. I do have an entrepreneurial background. My dad was, I grew up with dads that both were entrepreneurs, ran their own businesses. I began my professional life as a self-employed artist. I had a consultancy for a couple of years during the downturn, but my real strength is in that small business area. I actually became a banker in the early 2000s because I wanted to find a way to support businesses better, and absolutely loved that role for a number of years. And then I've been able to advance that value of mine of supporting small businesses, and it only gets better here in a couple of weeks. So I'm really thrilled to be able to continue moving forward in this journey that's really taken me in surprising places. So with that, let's get this show on the road, and I will introduce our panelists. Excellent. So if each of you, I'm going to ask each of you just to introduce yourself, just to take a minute or two and describe yourself, as well as, I'll pull that down, as well as a little bit about how your program related to this topic, which is funding a startup, kind of where you live in that space. And I'll start with you, Mike, even though you already introduced yourself. What I would like to hear a little bit more about OPB, Mike, is your region, what you cover, and also kind of where your sweet spot is in terms of funding small businesses. So if you could just take 1 to 2 minutes to give us that overview.
Okay, we have branches from Medford to Eugene to Coos Bay to Florence. So we basically cover the southwest portion of Oregon. Our sweet spot in businesses, I can speak to the Florence area. And Florence is primarily a lot of mom and pop type businesses, startups. Most of them are people that have retired and come in here and start something fresh. Loan sizes can be anywhere from 30,000 to 300,000, sometimes more. But typically for people, they're buying something that's existing, or they're starting something in a realm that they've had some experience before. So not a lot of innovation, but sometimes it's brand new business. And that's what I run into mostly in Florence.
Excellent. Thank you for being here today, Mike. And Oregon Pacific Bank, I just have to give a shout out. During the pandemic, Oregon Pacific Bank really shone with its ability to support businesses with their PPP applications. And I apologize for the dog in the background. Lisa, I'll go ahead and mute. Lisa Hartwick is with the Community Lending Work. She's been a friend of mine for a number of years. Lisa, could you introduce yourself and where Community Lending Works plays in this startup space?
Well, I'm hoping you guys can hear me. Can you hear me?
We can.
Okay, good, because my camera just went out. I got a brand new camera yesterday and I ran through it and everything with people yesterday and have been fine, and it just now went out. So I represent Community Lending Works, and actually I do have a background. My focus has been on business in the past, but my current role at CLW is personal loans and grants. We are a community development financial institution. And so, we try and offer tailored programs that have investing federal funds with private and local funds. And our main focus is support economic disadvantaged communities, rural communities, low income, low wealth individuals. And our main focus on the business side is startups, or younger businesses, or businesses that maybe have been a little challenged for a variety of reasons. And our specialty, or our sweet spot, is usually generally a smaller credit ask, 100,000 or less. We do $5,000 loans or even less, because we do a lot of artisan loans, micro enterprise loans, agricultural businesses, small businesses, but that are looking for that 100,000 or less. So that's kind of our sweet spot.
Perfect. Thank you, Lisa. And Rick, you've already been introduced to the group. Is there anything more we'd love to hear a little bit more about you and your background, and we'll hear more about RAINcap here as we go on. But tell us a little bit more about yourself.
Robert, thank you and welcome. Yeah, I've got a checkered past. I had a performing arts career and decided I wanted to not be poor anymore. So I went to college and got very interested in financial services, and have helped large financial service companies develop brand new businesses that had high impact to their bottom line. Moved up to Southern Oregon in order to run Brit Festivals, which is in Jacksonville, and highly recommend that you can have a great experience there in a summer evening. I went on to be a venture catalyst with SoReady, which is a vaguely analogous organization to RAIN down in Medford, Oregon. I got headhunted away to be the CFO for a startup, and that was very interesting and wonderful. I've been an angel investor for a long time, and met Caroline when she came down to Southern Oregon to whip us into shape in terms of angel investing network. And my obsession is trying to help every worthy entrepreneur out there to find their next best resource, but also to find their growth capital through RAINcap.
Perfect. Thank you. It's going to be a pleasure working with you here in the near future. So we already heard from Caroline, but I am going to be asking her our first question. But before I start asking questions, I wanted to let you know that we want this to be primarily about you. So hopefully some of you have already come with questions. Certainly questions will come up as we speak. I do have questions we can go through, but again, this is all about you. So do not be shy. Feel free to raise your hand. We'll also have people monitoring the chat, so do not hesitate. Again, we want this to be about you. So let's begin with our first question. I want to be certain we kind of frame this thing correctly, because when we talk about venture capital, when we talk about raising funds, if you've been around that space, the VC world is very much about going to a fund and pitching your idea and looking for seed rounds and different rounds, and that work only serves a very small portion. That formal process only serves a very small portion of businesses. But when you're in that world, or you're thinking about it, you will come across a term that we want to get clear about, and the term is accredited investor. And Caroline, I want you to take the first question if you could. Could you just describe for us what an accredited investor is?
Sure, I would love to. Thank you, Robert. And also, I have raised $1 million from accredited investors for my own 2 startups. So I'm very familiar with what that process looks like and how challenging that can be, and how, less than, depending on the study you look at, less than 2 or 3% of venture funding goes to women. If you're a person of color, that number is even lower. If you're in rural, it's even smaller and smaller and smaller. It's like a number that's like 0.00001 or something crazy. And that is changing, thankfully. We're seeing a lot more investments go in people of color and women, which is fantastic. But an accredited investor. So an accredited investor is an individual who has a personal net worth of at least $1 million, and that cannot include the primary value of the value of their primary home, and or they earn between $200,000 or $300,000 on their own and with their partner. And then there's other qualifications, like you have a family trust worth a certain millions of dollars. My dog's running around and hopefully not barking. So the joys of running webinars from home. And so essentially it makes it very difficult for an entrepreneur to even find these people. And before the Jobs Act was passed, and before there's different legislation changing around this, it was against the law to do a general solicitation to put out there in the newspaper, I'm raising $1 million, or I'm raising $500,000, contact me. That was a violation of securities law. And I know, because I made that mistake 12 years ago when I was interviewed by the Register Guard for my first tech company. And I said, I'm raising $2 million. And my securities attorney called me and slapped my hand very, very hard. So I know how difficult it is to find accredited investors. And typically in the venture funds and the angel funds that exist in Oregon and around the country and the globe, they are accredited investors. They are raising money from accredited individuals or institutions, and they raise millions and millions, and then they put investments into various companies based on whatever their thesis is, right? We have several here in Oregon. RAIN helped catalyze one of the funds with the Cascade Seed Fund. We raised $300,000 from the EDA. That helped Cascade Seed Fund put a $6 million fund together, and they've done a great job of investing in overlooked populations. So that's the accredited investor. And then you're going to hear shortly more about how, once the accredited investor definition or requirement rather, is removed from folks like yourselves who want to raise money from individuals, you're going to learn more about the different tools that we have on the panel today to help you raise those funds. So thank you.
Outstanding. Actually, before we move to Rick, because Rick, you've got my next question, but a very pertinent question, and should be able to answer it quickly for you, Caroline, is what's the difference between venture and angel? Could you
Yeah. And so there's, the angel funds and the venture funds. And, I could go on and on forever about the difference between those, especially in Oregon, because there are some funds that are venture funds, but they're really doing angel size investments. So angels are typically it's the individuals. I'm an individual and angel investor who invests my own money into startups at either 5,000 or 50,000 or whatever amounts, right? I also, as an individual angel investor, put my money into funds like the Cascade Seed Fund, and they're a venture fund, and they choose what those investments are. And I can't even be in that process because of my role with RAIN. It would be a conflict of interest to say, oh, I'm going to send you this company, you should invest in them. So I can't do that.
Yeah.
But there's some great definitions out there between angels and venture funds, and I'll put some links in the chat for you. And I also know that Rick Terozzi is with us today, one of our awesome advocates for entrepreneurship in Oregon. He has been involved in a lot of different initiatives. And Rick, feel free to put the link to the work that you're doing right now with Pi PDX. And also Rick is a great advocate, especially for the tech entrepreneurial scene in Oregon. So lots of great resources. Please, I'm not the only expert on the call today. Feel free to add links to help.
Excellent. And if you're not following Rick on Twitter, you probably should. So, and that's our, I meant, was speaking about Rick Turoski there. Rick Hood, I still have to follow you. I got to see what you're doing there. My next question is for you, Rick, and Sherilyn, thank you for the question about angel funds. That was good. So RAINcap is a crowdfunding platform. Can you describe for us the different types of crowdfunding? And really want you to get to that question about the accredited investor or non-accredited investors in this case to explain that.
My pleasure. Yeah, I mean, it's interesting. Crowdfunding has really evolved in surprising and really pleasing ways. But there's a variety of ways in which you can participate in crowdfunding. And I'll kind of categorize them by the way they sort of work. So there are pre-purchase of product crowdfunding campaigns. And, you know, maybe you've heard of Kickstarter and Indiegogo. You know, you get you send them $200, you get a hoodie and maybe something else once it's available. But there's no equity there. There's no loans that can be transacted. It's really more or less you're just kind of doing a pre-purchase of a product. Another category is raising money for personal need. And we hear about GoFundMe campaigns that have enabled people to have, you know, incredible operations that they need. People's generosity really comes out. It's a marvelous thing. But again, no equity. You can't hope to get a return from that other than just the warmth in your soul that you may have helped somebody out. And there's no such thing as a loan. It's really just sort of person to person, very personal types of interactions. Now, back in 2006, the Jobs Act was legislation that allowed non-accredited investors to invest in startups and businesses in America. And this was called Regulation CF, or crowdfunding. And this is what RAINcap is all about. What we're doing now is we are, as I said, we are partnering with Republic, and they have an international stage essentially, where they can provide huge audiences to those that are seeking to raise capital for the growth of their business. And there's a number of ways in which it can be done. You can do something called a revenue share loan, where you're paying back a loan a little bit each month until it's paid back. And you pay back more than just the loan, of course, so that people get a reward for taking the risk of working with you and lending you money. You could also do an equity play where you would actually sell a portion of your business to an investor, and they would join you as owners of that company. And you don't have to pay them back, but it'd be great to reward them with such things as dividends or some sort of return of capital to them over time. And we're really excited about this because it's completely democratized crowdfunding. You don't have to be an accredited investor anymore. In fact, almost every American can spend up to a little over $2,000 a year investing in any one of these exempt offerings, as they're called, that they please. And depending on your wherewithal, the sky's the limit at some point. And but I think what's really special about the way that that RAINcap will work is that the Republic, our partners in Republic, will do an incredible job of putting on a PR campaign and marketing of your deal. And it's up there for millions of people to see. They have something like 1.5 million investors, I think, on their platform right now.
Excellent.
That's kind of the lay of the land.
Excellent. Yeah, I think there's a lot to explore there. Really look forward to getting that implemented. Really having it move forward. So don't want to leave Mike and Lisa alone. So Mike, a question for you. If somebody wants to come to a bank, they want to come to your bank, they think they're ready for a loan, what do they need to have ready before they come to you? At what point are they going to be ready to see you for a loan?
Well, we can talk to people basically at the time that they have an idea, but if they're actually coming in to apply for a loan, we want to see a full financial package, which should include 3 years of tax returns, any kind of profit and loss if you have the business going already, or any kind of forecast inclusive of part of a business plan. Business plan is crucial. We want to see what your business is, who your competitors are, how much money you need to make it go, and then understanding where you think the revenue is going to be and the net income is going to be here in short term. We want to have an understanding that you have an understanding where your business is. We also want to see what your personal financial capacity is. So we look for a financial statement showing your assets and liabilities. And we want to understand what you have invested in this. If you currently have a job and you're trying to start something new, I would recommend not quitting your job if you're applying for a loan, so that we can at least show some sort of income stream to help pay for that investment that you're going to be making. That's helpful. Bank loans are not easy. Bank loans, in general, banks want to see 2 years of operating income and cash flow before they're going to go in and say that they can do something for you. True startups are harder. We're going to want to partner with the SBA or some other governmental agency to get some kind of fortification to the loan, because the banks are lending and they're insured by FDIC. We need to make sure that our loans are both safe and sound, meaning that what we invest in or what we loan for should be the source of repayment for that loan, and it should be well collateralized. Those are the things that the banks want to make sure that we understand how this is going to work, how it's going to pay back, and that you truly have an understanding of what you're getting yourself into. You have all the nuts and bolts put together. And that can also be inclusive of who your accountant is, any key employees, anything like that. We want to understand the full game so that we can make an argument for you.
Excellent. So I'm going to go off script here. I'm going to be asking Lisa about grant possibilities here regionally. But before I do that, Mike, the COVID era sort of established a new expectation and about what the SBA represents. A lot of people now, they think the SBA is where you go to get free money because they spent 2 years doing that. Can you sort of reset us into the normal and what the SBA actually does, say with their 7A loan?
The SBA, the typical 7A loan is it's not a loan from the SBA. The 7A is a guarantee for the bank's loan. And they'll guarantee anywhere from 50% to 90% of what the bank lends. But they put certain strings into it. The bank needs to make sure that we underwrite the loan properly. They do have some latitude. They're not collateral lenders. So if you have a business that you're investing in that has blue sky value, they will count that. Sometimes you have to have a third party assess that value to justify it. But an example, I lent for a restaurant where the name was worth something, but the real estate wasn't. And the real estate was worth $400,000, but the purchase price was $700,000. The SBA allowed me to use the name in that portion and do a fully amortizing loan for, I think it was $550,000 against that property, even though the real estate was worth only $400,000.
Excellent.
That the SBA is a great tool for the banks to make exceptions to things that wouldn't necessarily fit within bank policy, and their insurance helps us to get over those humps.
Perfect. Thank you. Yeah, I just wanted to be really clear that for those of you who are new getting into business, this era of EIDL, advances and forgivable loans, that's a disaster recovery era program and not a normal program moving forward. So with that, Lisa, I already gave away the punchline here, but Community Lending Works has done a fantastic job during the pandemic managing different programs, including grants. Do you have any new grants or continuing grant possibilities that are available to startups right now or small businesses?
I do. I have 2 active grant programs under the Community Development Block Grants, CDBG, for both Lynn and Benton County. And they just opened up the counties to include the entitlement cities of Corvallis and Albany. So if you do have a business that is at least 1 year old, there are funds available. It has been designed for sole proprietors around household income. And so it has somewhat been designed on the main criteria is for you to hit an income level. And it is catering more towards lower income individuals. However, if you do have employees, I can bring you in through the number of your FTE employees. And it's $2,500 per FTE that makes below a certain annual salary. So there's 2 ways to come into the program. It's a little bit of a complicated grant process. Don't get me wrong, because it's CDBG, so there's lots of reporting. But I will throw the link into for our website at Community Lending Works, and you can just reach out to me directly. I'm the one in charge of that program. So I have those 2 open ones, and I do have plenty of funds available still in each.
Marvelous, thank you. And those are grant programs. As I just finished saying, don't expect grants in normal times, but they do come around, and definitely reach out to CL, the Community Lending Works, for that. So before we go into my next round of questions, Connor, were there any additional questions in the chat that may have come through?
Yeah, I have one here. From Lucia, just for clarification, this one's directed to Rick and Caroline. Does RAIN accelerate capital in Oregon only, is it regional, or nationwide?
I can take that one. Yeah, so as I mentioned earlier, with us now being a global nonprofit, our goal is to accelerate capital on a global level. And you can only imagine the types of partners that we're going to end up interacting with there. But this RAINcap platform that Rick is the Capital Access Director for is for Oregon only companies. However, anyone in the United States will be able to invest as little as $50 of their own money in these companies. And as Rick said, it'll either be a revenue share loan or an equity investment. And the determinant of that will be done by our partners at Republic. I want to make it clear that RAIN cannot decide who gets accepted onto the RAINcap platform. We will do our best at the top of the funnel with you to make sure that you've got your financials, your pro forma, your market testing. And maybe Rick, you could take this opportunity to just explain what it's like for, I know we have one of our companies, Arable Brewing. Amy is with us, and Rick has been working with her for several weeks here, and maybe even a little longer, since this is our first company that's going to get listed on the platform. So maybe Rick, you can talk about what that process is like to get on the RAINcap platform.
Thank you. I'd be delighted. Yeah, we are very fortunate to have Arable Brewing on the call. And so one day, a brewer, a businesswoman, and her operations management husband walk into a bar. No, they want to create a craft brewery in a small Oregon town. Now, they have really important skills, strong experience. They've been talking about starting their own brewery for years. How do we make this happen? Where do we find the capital to make it happen? They brought their business skills up a notch through RAIN's financial literacy accelerator, Moneymaker. And they learned about RAINcap in the process. They committed. They use LivePlan, which is one of the top business planning platforms out there. Thank you, Palo Alto Software of Eugene, another great value-adding partner of ours. They write their business plan. There's some coaching that goes back and forth, where we're helping them to kind of fill in the various sections. Once the plan looked really great, we have some capacity at Palo Alto Software for them to take a look at the plan and to put some polish on it, particularly since they are aware of what Republic's requirements are. So they're kind of coaching to that acceptance criteria, which is wonderful. So Arable, here's the great news. They were accepted onto RAINcap in the first quarter of this year. So congratulations. And at the moment, Republic's marketing experts are getting ready they're actually mounting their campaign, and it's going to look great. And I just think it's tremendous that they got there. But I want to just add a quick note. So Republic accepts something like under 2% of the applicants they receive. So directly from aspiring companies. And RAIN's job is really to coach and guide any of the candidates that we bring forward so that their acceptance rate is going to be a lot closer to a higher number. It would be approaching 100%, we hope, but we don't know exactly where that's going to fall. But we have this huge opportunity to add value to Republic's process, and we're going to do that. We expect Arable to be successful in their raise, which is just under 200,000 through crowdfunding on RAINcap. And also, I believe they're going to be very successful in building their business, a wonderful craft brewery in a small central Willamette Valley town known as Lowell, Oregon. And you know, it's really all about telling a credible and compelling story to the right audience. We can help you tell the story, and we can help you find the audience.
Outstanding. Thank you, Rick. That's a great illustration of what RAINcap can do. Love that. So I want to go back to Lisa. Lisa, you talked about your grants. I would like to just briefly describe with your loan programs as opposed to grant. How do you differ from bank lending? What's the difference there?
Well, like Mike shared, we're going to look for a lot of the same information as far as a complete business plan, financials, things of that nature. Where I would say that we differ is we have a little bit more flexibility than, say, Mike does or other larger lenders. We aren't fully bound by all of the regulations. And so, we're going to take a little bit more of a holistic look at the business and the owner. Not just basing it on set criteria, credit score, income, collateral. We work a lot with startups, so we don't require that, needing 2 or 3 years worth of financials before we'll take a look at you. So that's a big difference for us, working with startups or those more challenged businesses. And, collateral, we're a lot more flexible on collateral. And I'm happy to announce we just actually took a small portion or earmarked a portion of our portfolio, and we are looking at loans down to 50% of collateral. So, kind of due to COVID, we're really pivoting and know that we need to analyze loans a little bit differently, especially for, our harder hit communities or people that are disadvantaged. So we're happy to announce that we did that. And
Beautiful.
It's a pilot program, so we'll just have to see how it goes.
Excellent. Excellent. Great addition. Love that. Mike, I want to ask you, this is a question that I think every business person should know, but what is the most common mistake when somebody's coming to you and they want a business loan? What is the most common mistake you see?
Probably not asking for enough and not getting themselves lined up as to exactly how much money they're going to need to actually execute the plan. Most often they're growing too fast, and bank financing can't quite keep up with them. If it's a mature business, that's relatively simple to work through, but if it's a new business, that's my most common error.
Excellent.
I would second that too, that we see the same thing on our side.
I think and Caroline or Rick might be able to chime in here, but I think that's really interesting that, it's in the VC world, the venture capital world, the asks are always big. And that's because the people who are investing understand what it actually takes to get a business off the ground, where, if you're just starting a business on your own, bootstrapping it, so to speak, you may not know. And so you might just be asking for the least amount you think you can get away with. And that's a really great point. I want to go back to the topic of crowdfunding, and Caroline, maybe you could answer the question: how long would it take somebody to raise funds on the RAINcap platform?
Yeah, it's a good question. So as Rick mentioned earlier, if you just went to Republic without working with us and submitted your deal up there, the chances of getting accepted is 1%. Not very exciting, right? So if you come through us, the prep work that we're going to do with you is going to take some time. And Amy could probably attest to that, knowing, I mean, she's been the initial person to pilot this with us. So it's going to take double the amount of time with her. Hopefully we're learning so that we can make improvements on that. But as Rick talked about in that process of, we first need to make sure that you're a good candidate for crowdfunding. And then we'll hand you off to our partners at Palo Alto Software, who will help you either write your business plan or update your business plan. And really, they're using the due diligence checklist from Republic, which is key, right? So they know what Republic wants down to the nitty gritty. Like, it's a 2-sheet due diligence checklist. And they're like, we want to see deals that do this. And Palo Alto Software team is making sure that they get you ready. Then Rick will review it, hand you off to Republic. Once you're handed off to Republic, the average deal, they tell us, gets funded in about 3 months. And you could go up to 4 months if needed. But here's one of the things that RAIN's going to do as well that's funded by the EDA is we're actually going to help you rally your crowd. So for example, with Arable in Lowell, we're going to help them put on a fundraising event and have folks come and taste the beer and sit down at an iPad and actually make investments, right? We're going to give you tools and tips, as well as our partners at Republic. They've been doing this, for 5 years. They've raised significant capital. They just did a Series B. They've acquired several other crowdfunding platforms. They know how to really make your deal shine and how to promote the deal. And so it is a bit of a commitment, right? Like, even when I was raising my own money, going after $2 million, I mean, that took 19 months. And that was like, there wasn't a really thriving ecosystem in Oregon at the time. And it was really, really difficult. So it's actually quite faster than you think it's going to be, but you're going to have to put in work, right? You're not just going to click that link I put in there and schedule a call with Rick and be like, hey, Rick, write my business plan, get my financials together. No, you have to meet us halfway. And we're more than happy to meet you halfway.
Excellent, thank you. And Aaron has his hand up. Aaron, what do you got for us?
Hi, everyone. Thank you guys for putting this on. I worked with RAIN this past year, and I actually had a question. Our company is still pre-revenue. And so it's kind of the chicken and the egg. When we're looking for money to get off the ground, it looks like we have to have already gotten off the ground before we could get money. So I was wondering what kind of tips you would have for those of us who are in that situation.
Rick, you want to take that?
Sure, I'd be delighted. If you are pre-revenue, that is not a game stopper. It's just it does add a little more kind of intensity to your application. But I think mostly the Republic will be looking for a great idea and a team and leadership that can make it happen. And you're going to probably have to prepare some pro forma financials fairly carefully, which are just projections of how you think the company's going to grow over time, your revenues and your expenses. And it would provide them with another sort of facet to discuss with you about how your company is going to grow. So Aaron, I know that you've got some great ideas, you've got some great experience. I don't think that needs to be a game stopper at all for you or anybody else that's got their stuff together.
Thanks, Rick.
And I'll just add on to that a lot of business owners, especially in the pre-revenue phase, they're really concerned about those projections because they're concerned they're not going to be right. And I can tell you from my banking days, and hopefully Mike Webb will agree with me here. The reality is that no projections are accurate more than 8 to 12 months out. After that, they're all over the board. The point of the projections is simply so that the person looking at those financials can say, you've got a plan, you've got something you're trying to accomplish. So don't let the need to be right slow you down. Amy, what do you got for us?
Yeah, I just wanted to do a quick plug as someone who's been working on their business plan for what feels like forever, and thought we had a really fine business plan lined out, and then got a meeting with Rick, and he was like, well, yeah, it's good, but he's been amazing. But the live plan program that we use to create our business plan was the best thing that we ever, and we stumbled upon it. It was before we had got together with Rick. And for someone who didn't know how to write a plan, who didn't understand projections, it really is user friendly. And if you haven't checked it out and you're working on your plan, I would just suggest going today and looking at it. So I just wanted to put that plug in.
And Caroline, do you want to just mention the relationship with LivePlan and RAINcap?
Sure. And I want to thank Amy for that great testimonial, not only of Rick, but of our partners. And I think you hit the nail on the head. There's a lot of people out there working alone, a lot of entrepreneurs working alone on their business plans. And you're like, I'm hitting all the marks, path to revenue, competition, right? Your little hockey stick growth thing. And then, it gets run by the due diligence checklist for crowdfunding, and it's a little bit different. So you guys already did have a pretty solid business plan. So give yourselves credit for that. Amy, you did a really great job. And I can't wait to taste the beer that you guys are making. So it'll be our first fundraiser. It'll literally be a fundraiser. I'll stop making jokes now. So the relationship with Palo Alto Software. So, and again, they're located in Eugene. They did start in Palo Alto and they moved, they really grew. They only had like 3 employees, I think, when they moved from Palo Alto to Eugene. So they're really an Oregon startup success story. And so we have a deal with them that they will provide an incredible, and maybe actually we won't share that link yet. You can get 6 months of live plan for only $40. It's usually $20 a month for those of you that actually go through the program with us. And we even have some scholarships if that is a barrier for some folks. But working with them, you could literally have no plan at all. We prefer that you actually have something, even if it's a spreadsheet with numbers, because I always start with numbers first, right? The numbers tell the story about your market opportunity. And then they will work with you anywhere from, it could be a week, it could be 6 weeks. It depends on the shape of your plan, but you're going to get one-on-one technical assistance with their experts who know how to use this checklist. Cami also asked if we could share the due diligence checklist from Republic. We don't have their permission to do that yet. And I know they were really protective of it because of other crowdfunding platforms. They all have their own little sort of way of screening deals that helps. And so we can ask them, Rick can certainly ask them if there's maybe like a truncated version of their due diligence checklist that they're willing to share. There are plenty of due diligence checklists out there, like the Angel Capital Association has some, we have some, but these are the one that we're using is specific to Republic's platform, which they've built for us called RAINcap.
Excellent. Thank you, Caroline. And we're coming up on it here. So I think I will ask Rick one more question that I think is really exciting about the RAINcap program. If you're out in rural Oregon, and really that's just about everywhere except the center of the Willamette Valley, the ability to fund local to me has always seemed to be an opportunity that needs to be fleshed out. Does RAINcap give you the opportunity to really dig into your local community to find that support?
Robert, it absolutely does. And yeah, it's really, we're kind of pursuing the growth or the raising of capital on a couple of different fronts. In the case of, I think I can invoke Arable Brewing again, that they have known people in their community that want to see them succeed. And, it may be that they are in a position to do something great or small, but anybody can do it. And it's marvelous to feel like you've gotten some support from your community. They see the value of your business in the community. They like you. They want you to be there. So Robert, having your local community really support you is so important. So for me too is that it's out there nationally, where there may be somebody in Arkansas who's like, I just love craft brew pubs going up. This looks like a really great one. I'm gonna invest. So you can reach as far as you want, but as Carolyn mentioned, very important to try and rally the crowd locally to support the business. And that's also a great vital sign for other investors, where they see, oh my gosh, they've raised some money and they're off to the races, and I want to get in on this. So
outstanding.
The local support though is super great, and it's really the sort of gist of community impact investing, where you're investing for a return, but also for your community.
Love that. Thank you so much. Thank you, Rick. Thank you, Caroline. Thank you also to Mike and Lisa. It's been great to have this broad view of the funding landscape, and having you here to share with us. I hope, for me, it's provided a really good illustration of what that landscape looks like and where your business may plug in depending on where you're at. So I thank you all for the questions, for being great participants, and I will hand it back over to Caroline to close us out.
Thank you, Robert. And again, we're so thrilled to have you join our team as our Deputy Director. Thank you, panelists. Thank you, Amy, for chiming in too. Really appreciate that support. We're hoping to get you up on that platform so that we can actually start helping you raise that $190,000. But at RAIN, our mantra is what's next. That's what we're always doing. So after Amy raises her 190,000, we will be saying, okay, what's next, right? Let's keep going. Let's keep moving things forward. So I just wanted to take the last minute here that we have to talk about two things. One, we've already put this link in the chat, but if someone on my team could do this again, if you want to engage with our RAINcap program as an entrepreneur, as a business owner, you'll want to go to this website and fill out the intake form, and you'll get a meeting scheduled with Rick, and we'll take you through the process of our funnel to get you handed off to Republic. So that's the RAINcap program. And then we also have our Rainmaker Accelerator. I love that we have a fun brand name that we can do this to help you make it rain revenue in your business. This will be our third time doing this as a digital marketing accelerator. It's completely free to Oregon businesses. We're launching it again in April. One of my team members, please put the link to sign up for that. We usually get about 70 to 100 Oregon entrepreneurs and small business owners attending the accelerator. It's 10 weeks. We break you off into cohorts. We have experts who come in and talk about various topics. This next round, folks are very interested in learning about marketing on TikTok and Instagram, and doing Facebook ads and landing pages and A/B testing ads and Google AdWords and all that fun stuff. And if none of that sounds like you know what that means, you will know what that means. And analytics will also be a part of it. So you can go to the website and sign up there. But that was all I had. Thank you so much, everyone. Thank you, Robert, for moderating. Thank you, everyone, for showing up. We look forward to supporting you as you continue to launch and grow your businesses here in Oregon. Take care.